tryna take it down, placeful. You just scoring mines, best the bar.
All right, ladies and gentlemen, I got your watch list coming in at January 10th, 2020. And this is going to be a special video because we are going to go over all of the plays we made today. We made a bunch of them, but the best part is we pretty much used a bunch of different strategies. So I get to recap all of those. And then given we are only looking at a few key things with the market, what's going on with Iran and how we're setting up with all that, it makes it very, very simple of what we need to look forward. So I'm pretty much going to explain all these strategies and explain why we just put $40,000 into this Robinhood account. So this is going to be a special video. Again, I can't wait to recap all these. So I hope you guys are ready. I need you to stay tuned, take notes, get your head in the game. I got the keys for tomorrow. We're going to go over the plays and then also plays we're going to be looking at tomorrow. So let's get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's going to be a Froggy Friday. And don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. If you got any plays, let's source that information. I know you guys are ready to go with this. So let's talk about this. Where did this money come from? What are we doing here? If you guys don't remember, this was the real estate account. We funded this with $20,000. I did this to see if we set the people up with the stream alerts and just all the videos we're doing. I had the people at my real estate office. I funded the account, made a joint account with them. I gave it to them and I said, hey, I want to see how you guys learn. I want to see what you pick up. Go play with it. They did pretty good. They did end up pretty much taking a bad position here on stocks. They played the IPO with real. They put 1,200 shares. So literally they put $21,000 of it into the IPO. They're down 4,600 on that position alone. But recently they added to the account. They closed a few deals. So they said they'll contribute some of their commissions to this. So I was like, all right, let's run it up. But they were doing some of the dividend stocks and going after the growth in dividend. And even they got Snapchat and all that. And what they started doing was our ghetto dividend strategy, selling the covered calls. So that's what we did. And I made a play on this today, doing some of that I'm going to explain. But, why did we put the money in here? Again, this is one I want to see for people to learn. And I have people who are very, very new. That's why they even made some mistakes selling the covered calls that we could even go about and talk about. But the real thing, especially even after today's 11 at 11, the key is it's just very user friendly to be on Robinhood. So that's why I'm going to show you. I did an example of a credit spread on Robinhood. We did a butterfly even on Robinhood today, and then we did a covered call all on Robinhood today. So why did we put this money in here? Why are we choosing to put it here instead of the Tasty, instead of E-Trade or whatever, even Thinkorswim, especially for a long-term drip type thing, is because you could do this on any platform and it's understanding, get kind of used to a user interface, but once you kind of understand how things work, it'll be a lot more easier to transfer it to something else. But at the end of the day, you could use whatever you have. And again, Robinhood is very, very easy to get started. So check out the long-term videos and follow along. And hopefully you guys learned something from this. So that's your quick explanation. But now let us talk about the keys. And then we will go over all the plays we made. So as far as the keys go, there's a few things to watch today. The market went up today. We gapped up. We were up even 1% at one point, and then it started to come down, and this was related. This was middle of the day. There was the news report that the plane that got shot down in Iran, that Ukrainian plane, that they said that the reports came out that it probably was shot down and not an engine failure. And now, if you guys remember, I've been saying that for the last few days, that I pretty much suspected that it got shot down. I think a lot of people did, but that's why I was very even shocked that the market even took this so negatively, because I didn't know that many people were really under the impression it was an accident, considering the circumstance and all that happened. But the market didn't like that. And as you know, then the claim got refuted that Iran still says it's an accident. Now Iran even invited Boeing to come even investigate, and also the National Transportation Board. So it's going to be interesting to see how that plays out, but it relates to the markets. And here's really what we're going to look for. This is that logical reasoning as to what is going to cause the market to move. And if not, it'll probably do nothing or respond and keep melting up because of what's going on with the Fed. But pretty much if Iran attacks in any way, shape, or form, whether it's an official attack or a militia attack, the market is going to react. If the plane crash was because it got shot down, or if they find out it was an accident, the market's going to react, and specifically Boeing's going to react. And then finally, how politicians react to both of these, the market is going to react. So if the militia attacks and ends up killing a United States citizen, the market will react because pretty much politicians are going to react to that in a sense. But whatever happens with the plane crash and all that, that will cause one reaction. But then why the market is going to react is because they want to know, what is policy going to do? What policy will be created, and what's this going to lead for the future? So keep that in mind coming into tomorrow, even coming into next week. There is that. And then another thing today, this led to one of the plays we made. Fed, I forgot forgot which Fed member said it, but they said about finding a long-term solution for this repo problem. So that got me thinking of starting to think about February and even the upcoming Fed meetings. We did have the minutes today, but even watch how if global tensions worsen, remember that has been a cause of concern for the Fed, even when they were just referencing, some stuff with Europe before. They've mentioned stuff in Iran and all that, after the Saudis, but they would always say global tensions, even with trade. But now watch how real geopolitical tensions could start to get brought up. But that's why the bonds were interesting today. We played a play on them. And then finally, for Friday, you got to watch out for shitty stock rotation. Again, if we don't see a big move or just that melt up, pay attention to the laggers and leaders and pay attention to see some of these stocks rotate up. One of them is another play we made today, Beyond Meat. And then finally, it's Froggy Friday. So get ready for the frogs. There's going to be a room to make some plays. We did make some even weekly plays that we were talking about. Man, again, we talked about a lot today, so I'm excited. But pay attention. Call them out tomorrow. That's why we got to source that information. Be active in the chat. If stuff starts to move, I even have a weekly play for tomorrow I'm going to be looking at. But even then, if there is big moves or even if there's not big moves, don't forget about getting time and how important next week and the week after that's going to be, especially at this level we're breaking with the market and with all the news and everything else. That is going to be very important. But let us get into the plays. So there is a lot of plays we made. So as far as this big account, we'll talk about this account, what we did here. Simply, we'll discuss this at the end because this has to do with buying long-term shares and dividend stocks. But you guys will see this account already has 100 shares of Abivai. They picked up 100 shares of Snapchat. I was able to get them 5 free shares today with the strategy I'll show you. But let's go to the small Robinhood account, $250, and talk about what we did through this, because I did. First, there was a butterfly, and this was a daily play coming in for tomorrow. And then I did 2 credit spreads of 2 different probabilities that highlight how you could play credit spreads that expire, in the short term to even generate weekly income, and how you could use selling premium as a safe, reliable strategy when it comes to trading. Again, buying some of these options, going for growth, you're going to expose yourself to risks and losses. There is strategies that are high probability, high percentage that you could trade consistent that will give you good results. They just take a lot of patience and they don't pay as much. So let's start with the butterfly. As you see here, a butterfly, remember I went over this the other day. We did this on Amazon. I liked it because it was $8, and this play offers a $250 max gain. So as you see, it's 3 options here. But again, this is what we showed in the other one. You buy 1, sell 2, buy 1. We bought the 1930 call, sold the 1932.50 call, and then bought the 1935. Our max gain is if tomorrow, if Amazon closes at 1932.5, that is how we get max gain. We would turn $8 into $250. So this is a good play. It expires tomorrow. Pretty much now you could get the same play almost for a similar price. We bought it earlier in the day when Amazon was up. So pretty much Amazon only needed like a $20 move to get there. Now it needs about like a $30 move. But essentially, it's a great way. That's what we thought Amazon was going to go to at the end of the week if it just even broke out from 1900. But it was cheap. I liked the play, but you were able to do this on Robinhood. The issue was it took a while to get filled, and I had to go at a little bit of a higher price. Somebody got filled at 3 cents. Efren called it out at first. He got it in at 3. I got it in at 8 cents. Some people got it at 9 or 10, but it's the same thing. You could do this on any platform, but you were able to do it on Robinhood. So you guys could see here. It's not going to let me go to the other one, but man, my Robinhood is being slow. Let's say you wanted to do a normal butterfly. What you could do here, again, it'd be just like this. You would buy one of these, and then you would click buy. You could click buy here too because you're going to have to switch screens. So remember, you see these are the wings. This is going to be the body. You want one of each of these. Then you're going to go to sell. And then you're going to sell this middle one. And this is a butterfly, but now this is all saying just one of each. That's why it says you have a total cost. You click this button and then click custom ratio. The one that you're selling, you sell 2 and you buy 2, but you're buying 2 in different strike prices. And now press continue. Oh, oops, I looked at the middle, but that wasn't the sell one. There you go. See, so now it should say total cost 30 cents is what it's saying. It's saying 0 cents to 30. That's probably the last trade. The ask is at 255. I don't know because it's the market's close. But then you would do 1 and then boom, you set your price and that would be a butterfly. So again, I posted the video. I posted it 2 days ago, just 2 watch lists before this. You'll see it. We did the whole explanation of the advantages of the butterfly and whatnot. But that was the first play. The next play we did was selling a credit spread, and I did 2 different kinds. This is the strategy where you sell on a Thursday so that you could collect the premium. If the contracts go and they make a certain move, you sell high probability or you could sell low probability, high credit plays. And the goal is, though, if they do expire pretty much by the end of tomorrow, you're either going to get the income or you're going to lose a defined amount. This is how I said you could trade whether you have a busy schedule or you're working, or you can only tune in so much, or again, you just want a safe, consistent strategy. This is something you could do. It does not pay as much, and now this is the play. We did an ABVI credit spread, and we sold the puts. So really what this was, we sold an 89.50 put. We sold that for $12. It expires tomorrow, and then we bought an 89 put for 6 cents. So the total credit was $8, but now the max risk on this is about $42 because these are 50 cents apart. You got $8 in credit. Your max risk is $42, but our break even, pretty much all I need from this play is for ABVI to go above, to make sure it stays above 89.30. So anything but above 89.30, we'd make money. If it goes 89.30 or lower, we would lose money. So the point of that play, even though it's a little bit amount of money, it was about a 76 or 78% probability. So you had a very, very high likelihood of making it. That's why it paid out so little, but the risk is so high. But that's an idea. That right there paid for the butterfly that I did on Amazon, so those negated it. So if that Amazon hits, that'll be good. If it doesn't, it's paid for by a high probability credit spread, or you could just collect $8 of income using only, like $40 of credit in your account. So if you only had $40 or a really, really small account, credit spreads are a great way to build back even an account that you blew up. So that was the first one we did. But before we get to the next one, the key, even why I did this on ABVI, and this is also the risk. You got it. How we negated this risk was by selling a contract out of the money on the put side. Because if you sell in the money puts and the stock has a dividend coming up, you could get assigned and end up paying the dividend, which is that assignment risk when you're selling credit spreads on those companies. So ABVI has an X dividend, and that's why I played it, because pretty much you could see it's been going up, it's been holding up, and the logic is with dividend coming up, the last day to buy the stock will be Monday, the X dividends on Tuesday. Pretty much, I don't think the stock is going to drop too much because you're more likely to see the stock rise up the dividend amount before and then sell off after. So that's why I sold a out the money play, so we didn't get the dividend risk, and then that way it was a higher probability. And I did this during the 11 at 11 to highlight the credit spread and how you could do this strategy. So that's the first play we made. But then I made a riskier play on AMD. So AMD now, remember, they were lagging yesterday. They shot up 2.5% today. They were killing it. But then I did a different play there, and that one has less risk, higher reward, but it's less probability. And this is the same concept. This one expires tomorrow. It's a credit spread. And what we did was we sold the call. So I sold a 48 call for $1, and then I bought the 48.50 call for 72 cents. You walked away with a credit of $36. So I got $36 up front. There's a 50-cent difference between the contracts, a $50 max risk. So minus the credit, my real max risk for this trade is $14. So either by tomorrow, depending on where AMD closes, I will either lose $14 or I will make $36. Or I could close it at any time before if I'm up or down. But if I'm down, I'll just hold it. If I'm up, I may consider taking profits earlier. But being a 48 call, sell the 48.5, I pretty much need AMD to close below 48. And I think the key I need is 48.70. Is my break even, $30 above, or 48.80, I think, is like $40, $30 above the highest strike point, because that's how much I got in credit. So anything below there, we would start to make money. So if AMD drops tomorrow, the market goes down, and that's why I was kind of seeing it. If the ABVI dropped and the whole market dropped and stuff brought it down, then the AMD would drop, hopefully, and I would be able to profit off that. But that was one of those plays now where you could do the same strategy, but this is a 30% probability of play because this call was in the money when I sold it. That's why I got such a high credit. I collected $36 of credit with only $14 of risk, where here I only got $8 of credit and $42 of risk, but this one has a 3 and 4 chance, a little higher probability of being right and me losing my money. This one, it's reversed. There's only a 3 in 10 chance that I'm actually going to hit this play to walk away with such a good risk reward. So we'll see tomorrow, but this is a strategy you guys could do to even sell premium. And again, selling premium offers just more wiggle room and higher flexibility as to just buying normal contracts. And again, we have the tutorials on the spread and all that. Check them out. All the spreads, every single type of spread you could do. But this is a good way to see the differences between high probability plays and low probability plays, how much you can make, how much you could risk. So we'll see tomorrow how these play out and how, we even talked about the selection of picking the ones with small 50-cent increments and then again going in the money versus selling one far out the money. So those are all the plays on Robinhood. And then finally we did a TLT for February on this small account. I grabbed 5 of the TLT February 21st 151s, and this one I'm going to want a ghetto spread, but that's the one I'll show you guys the ghetto spread of how we're going to do it on the Robinhood. But we did that with Beyond, but this play, I like it, and I'm going to use this again depending on how much the TLTs go up, if they do end up shooting up, and why I chose to play the TLTs this week because of that statement from the Fed. And again, when the bomb stuff started happening, TLT started running up even when the market was going up, which was a little bit odd. And then after the Fed comments, everything, it just kept going up, and you saw TLT really lead the way before the market started getting a little nervous. So it makes sense that if anything happened with Iran, bond people are going to rush to bonds, TLT is going to go up. If they do a long-term plan and they're changing it with saying something with this repo crisis, it'll play that, and it'll also get to play the upcoming Fed meetings that are happening. So it was a pretty good, it's far out the money. That's why we went small at 35 bucks, got 2 months of time on it, and then we're going to hold that. And again, depending on what happens with the valuation, we could try to ghetto spread it, but that is just a naked call. So there is that account, but now let's go to this account. Finally, the last trades I made. Oh, and yeah, here, and shout out all the long-term accounts. People were actually kind of blown away today. If you guys see all the long-term, we were able to walk away with even like $173 in profit from all this Snapchat and Abivai and everything else. So some of you guys really got to see your long-terms, or you guys are seeing it finally put in work, and some of you are pretty shocked. So shout out the long-terms. Those did good, but I didn't have to touch anything. I still have cash. I wanted more Abivai, but I didn't get some. I think I'm going to pick up more tomorrow or on Monday for the ex-dividend. We will see. But other than that, all we did was we made another move for this account now because they had Snapchat shares, but I'll talk about that. But lastly, I will talk about Beyond Meat. And again, we had this in the long term. You guys saw this, but this one's crazy, and I really, really like it because now I wasn't suspecting this at all. The stock has been dead for like 2 or 3 months, and then now it's perking up off of the news. I don't know if enough sales went in. You could see the volume, shitty stock rotation, whatever it may be, but they're breaking above 90. Anytime they've broken above 90, well, that was one of their key resistance that they met. But even during this huge run-up, that minute they broke 90, they failed it once. They went up almost to 100, came down for a little bit, but then that's what led the next whole saga of this. But anything above 92, it could be good. So I made a play. I made 2. And this is, again, different strategies. One was a naked call, and this one I really, again, this one's for next week, and I want this one to ghetto spread, meaning that the contracts in Beyond go up so much in value that if Beyond makes a few dollar moves or opens up tomorrow, I'm going to sell the ones below it, sell the 135s, get a $500 max gain, and we'll easily be able to get our money back. So that's the strategy with those. But then this was the other play I made for them. It was a debit spread. So again, we made a credit spread. Credit spread, we were hoping that the contracts expire worthless. A debit spread, we were hoping that the contracts expire in the money and end with value because we paid for them and we want to sell them for more money. So this was a Beyond 105, 110 call, and this is for January 24th. It has 2 weeks. We bought the 105 call for 160, sold the 110 for 123, paid $45 total. It has a $500 max reward, and it's playing time on this Beyond because Beyond could go up and down, but essentially if it breaks out from here and then goes, it could maybe shoot up, come back down, but I'd give it time. It could start to trend up, but we will see, but I was willing to take the risk there. So that was that play, and now finally the ghetto dividend. This is how we are using selling covered calls and covered puts to build a long-term portfolio, but you can make any stock pay a dividend by collecting some of the premiums. So again, they did this. They went and they bought 100 shares of Abivai, then they bought 100 shares of Snapchat, and I didn't do these trades. They did this. Again, they were watching the videos, and this is why it was cool because I was able to correct them, and I could even show you guys the problem. They sold Abivai for this week at 90.50. So they bought the shares at the beginning of the week, but then they sold this 90.50 one for $15, and they did that so that they could they're trying to sell covered calls, but the problem was they bought the stock at 88 and they sold a weekly option. You're supposed to sell a little bit of time, and that's the same thing. That's the mistake they made too. They did it on Snapchat too. They bought Snapchat at like 1680 or 1650, but then they sold an $18 call that expires in 1 week. Usually you want to get, again, if it pays high enough premium on the short terms and you could get a decent return, go ahead and do it. But usually you want to sell about 30 days out, 45 days, so that you're getting a good mix of time as well as a value further out. But that was the mistake, again, they made on Snapchat as well too. So I wanted to show them how to do it the right way. What did I do here is there's about $9,000 of cash was sitting in here. They only had 100 shares of Snapchat. The shares of Snapchat are cheap, but Snapchat ended up hitting, almost $18 today. It kept going crazy. So I said, we will sell puts because they want to build up a long-term position anyway. So this is how we're going to do it. We're going to go and sell puts. So what I did here is I went to Snapchat. We went to the option chain. We went to the February 21st puts, and you could see -2. I didn't own these on this account. They were not there. So I sold 2 of these at about 45 bucks each, or I think a little bit higher, but I'm -2. And what happened is I collected the premium on these. So I collected $88. And then by shorting this put at $15, I'm pretty much agreeing by February 21st. I said, I agree to buy, since it's 2 contracts, 200 shares of Snapchat at $15 a share, which is still $1.50 a share lower than the first 100 shares they bought. So think about what I just did. All I did was agree to buy 200 shares of Snapchat, which I want to buy shares of Snapchat anyway because we're holding it long-term, building a position, and I agreed to buy it at a less price than has already been purchased on this account, and I got paid about $90 to do so. So this is how it would look. If you have cash in your account, you could do this on anything. You go here. I clicked here on the short put, continue. I said 2 contracts, 0.44, and it'll say minimum credit $88. But then you come here, what's the collateral? You only need $3,000 of cash. You're pretty much securing, $1,500 is one contract, $15 a share times 100 times 2, that's $3,000. I'm pretty much pledging that here's the $3,000 I would have spent. You could hold it as a deposit, or Robinhood pretty much holds it so I don't spend it, so they know I'm good for it. That's how I'm able to make this contract. I collect the person's money, and now we just wait. But now with part of our strategy, since we want to own Snapchat anyways, what did I do? I got paid that $90, and what I was able to, and I went down to Snapchat. You see we now have 105 shares. See, and even come there, it tells you how much cash collateral and stock collateral. But I bought 5 shares today with that premium. I took that $90 that we collected to agree to buy at 15, and then I went and bought 5 shares. So I took that person's premium by agreeing to buy the stock at a lower price. I wanted to buy it anyway. I took that money and I put it in the shares. That's what we also did so far on this account. Remember, I already have 8 shares for free, but that's kind of crazy. Damn, they got 5 shares off that. I mean, that was good premium, but tying up the collateral, they were able to still make moves with that. But that right there, that is selling a cash secured put. And then here again, they were selling the calls. We're going to sell the calls again once these expire because it's a 1-to-1 ratio. So now they own 100 shares. They've sold a call. That's the 100 shares of collateral. So this needs to either expire or we buy it back. But we're going to do that again now, either next month or whenever it expires. And then we go sell another call further out, agreeing to sell at a higher price, take that premium and reinvest it into the stock. That is your ghetto dividend, my friends. But those were all of the plays today. We're still holding the long term. It's going to do good as far as everything else. Let's get into that, but hopefully you guys learned on any of that, and please let me know if you have any questions on any of these strategies. Let me know if this was helpful. Comment below, let me know, so then we could even make some follow-ups or come on stream and we could discuss this, but hopefully this gives you guys a good reference point of a lot of different strategies. So now let's talk about everything else tomorrow. So I want to watch that. I want to watch Shopify. Remember, we're still in those plays that expire in 2 weeks. That play actually came back from being down 30-40%, so we're still holding those. I like those. I would wait again if you want a debit spread on Shopify. Wait till it moves down a little bit. Again, this is probably going to move like Beyond Meat, which is going to be important. I like Amazon. We still have that play. We're going to be watching that. Watching Beyond, TLT. We went over all these, and then Starbucks, those 100 calls we have that cover earnings, those were up, I think 100% today. Now they only close up $2 or $3. Still pretty decent. But watch Starbucks. All the restaurants got to upgrade today, so those are going to be good. Then ISRG, this was they had earnings. I didn't know they weren't supposed to report today. Apparently, all the data, but it was wrong. They reported they did good, but this is one of those obscure names a lot of people don't know about. Watch this for a frog tomorrow morning, and just even a continuation play that could be good. Watch Snapchat. How this moves is going to be very, very interesting. Again, if it breaks out here on 18, and that's the thing. This could be one now. Being a Friday, the options are already going to be cheap. It doesn't move a big increment. This might be a good one for Friday. That's not going to be my best YOLO play, but I'll look out for it. Same thing even with Boeing or even getting time, but all of that news, Boeing is right in the middle of it. They're going up and down, and again, be on the lookout for that Buffett rumor. That's going to be important. And then finally now UNH, and I say finally stopping here, because this is the one I have a weekly play on. So this is one I saw today. I was considering getting it, but I'm going to keep my eyes on it. Oh, they closed at 11. Yeah, no, these were at 5 cents. These are supposed to be 5 cents. They were at 63 cents in the morning, saying a 300 call. You pretty much saw, remember, UNH is done. It kind of looks like AMD, where it hit this top, then it kind of slowed down, but off of this one good day, it bounced right back up. It's getting right back up to that breakout point. And again, we've even seen healthcare kind of inversely rotate, so that could be important. I like it, but it didn't get past 300. So if I could wait and try to frog one of the 297s and those get cheap at 5 cents tomorrow, I may want to pick that up on a daily. But I'm going to be watching 297s or the 300, or just even in general UNH or even Cigna. Then lastly, HD and McDonald's, they did good. These ones could be some of those surpriser runner-ups that we see. But these moved a lot today, and I think a lot of people weren't expecting that. And even the option chain on like Home Depot is pretty jacked up, but watch out for that. If they move bigger than people expect, these are ones that could give an extra $2 or $3 surprisers, and that's how some of those 2-cent, 3-cent options go $2 in the money. So watch out for that, HD McDonald's. And then finally, for this last chart here, watch Northrop. I think they're going to be, again, with any of the Iran stuff, the fact that they still even went up today, I think that says something in the midst of all this. So keep an eye, and they're still holding up the first gains from Soleimani. So at any point, just pretty much the contracts are just getting cheaper. The ones we already bought are down, but it's still saying something. Ooh, after hours, rip on the SPY, baby. But watch them. Spotify, again, remember I bought that one share the other day, again, for the smaller portfolio. I'm going to wait a little bit here, but I still like them and how they could break out. I was saying they're up after hours now. And then finally, Walmart, they were kind of lagging again. Remember with what we said with McDonald's and all that, if these all kind of operate the same thing, they're both these like growth and their dividends and everything. So watch out for Walmart. It's a slow mover, low IV. That could be a good one. But if that one starts to turn around, remember, pay attention to the laggers and leaders. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list down below. Make sure we see you there in the morning. Hopefully you guys were there today and you understand value, baby. You got to learn what to value. You better value yourself. You better have a set value on value. You better learn to value valuing things. Oh, they don't feel me, baby. But it's going to be crazy tomorrow. I need your head in the game. Control that YOLO demon, the FOMO demon, the no-no demon. Remember, man, this is the first week of January. We got another week after that, another week after that, another week after that, another week after that. Let's go, baby. It's 2020. It's the code, baby. We're in the game. Let's go.